The head of household filing status was created to give single parents a tax break, but in certain instances, an individual who is married might be able to use this filing status. Now, as this is one of the most confusing and, in my honest opinion, often abused filing statuses, we're going to tell you when one should and should not use it. And towards the end, I'm even going to dish some tea on how shady tax preparers and other individuals might be using this filing status when they really shouldn't. Welcome to Tax Chit Chat, the place where we talk all things tax, all the time. What are the qualifications for claiming head of household? Well, the first thing to know is that your filing status is determined by your marital status on December 31st of any given year. So as of December 31st, in order to use head of household, one must either be unmarried or must be considered unmarried. And we'll talk a little bit about what considered unmarried means in just 1 second. The next thing is that you must have either a qualifying child or a qualifying dependent who you will claim as a dependent on your tax return. That qualifying child or dependent must have lived with you for more than half of the year, you must have provided more than 50% of their support, and your spouse cannot have lived with you during the last 6 months of the year. With regards to the qualifying child or qualifying dependent, realize that it can be your son, your daughter, your brother, your sister, stepson, stepdaughter, foster child, mother, father. There's a whole host of individuals that can qualify you for this status, but generally speaking, they must be related to you. So you can't go using Fluffy your cat for head of household, nor can you use your friend or your roommate for head of household either. And if they are your parents, unlike the other individuals who must live with you, your parents do not have to live with you in order to qualify you for the head of household filing status. However, they must meet the qualifications on all the other rules. When a married person can use this status? A married person can use the head of household filing status if they are considered unmarried by IRS rules. And to be considered unmarried, you must meet these qualifications. First, you cannot file a tax return with your spouse, so that means that you cannot file a joint return. 2, you must pay more than 50% of the cost of keeping up a home. And 3, you cannot have lived with your spouse during the last 6 months of the year. The best way that I describe this is that you and your spouse are either 1, legally separated, or 2, estranged, meaning that you don't live in the same house, you have separate households, you have separate bills, you each provide for your own lives, and yes, you have 2 separate lives. If you meet all of these qualifications, then you are considered unmarried and you are qualified to use the head of household filing status. Now, what about those shady tax preparer scams and fraud that I was talking about at the beginning of the video? Games people play with the head of household filing status. So the head of household filing status is beneficial, and guess what? Some tax preparers and taxpayers actually know this and intentionally game the system. So what I mean by that is that if an individual is claiming head of household, their standard deduction is going to be almost 150% of that if you were claiming either single or married filing separate. Also, you're going to be on a much more favorable set of tax tables than you would if you were single or married filing separate. And what these two things usually mean is that you are going to pay less tax than if you were filing as single or married filing separate with a dependent. Now, like I said, some tax preparers and some people actually know this. So what they will do is they will intentionally file as head of household knowing that they do not qualify for that. But let me let you in on a little secret. That is fraud. And let me let you in on another little secret. That means that the statute of limitations never runs on that tax return. So let me explain. Generally speaking, when you file a tax return, the IRS has 3 years to audit that tax return, but there's certain rules. If you misstate your income by 25%, so let's say you reported $75,000 worth of income when you really earned $100,000, then that statute of limitations now is 6 years. But guess what? In instances of fraud or criminal intent or behavior, the statute never runs. So if you intentionally indicate on your tax return that you are qualified to take the head of household filing status, but you are not, what you've actually done is just committed an act of perjury. So for the little bit of money that this is going to save you on your taxes, do you really want to claim this filing status when you shouldn't? Or better yet, do you really want to tell your tax preparer, oh no, I'm not married? Or do you want to say, oh, I didn't live with my spouse for the last 6 months? Wink, wink. Take it for someone who represents taxpayers before the IRS on a routine basis for tax debt that they can't pay. The IRS is someone that you definitely do not want to mess around with nor play games with. So if you're confused about whether or not you should be claiming the head of household filing status, I recommend speaking to a tax professional. But before you meet with them, I recommend watching these 2 videos so that you'll be able to have an intelligent conversation on what filing statuses are actually available to you. And until we meet again, always remember, keep earning, keep learning, and just like that, this chat is adjourned.